Okay, so y'all see it. Chase uses Nova Credit to bolster cash flow underwriting. Chase will be employing the credit infrastructure and analytics company's Cash Atlas for cash flow underwriting, according to a Wednesday, September the 3rd press release. Cash Atlas is unique compared to traditional credit data solutions as it generates a complete risk profile for no file, that as far as personal credit, thin file, and even thick file consumers. We believe this is the future of consumer underwriting, helping to responsibly serve more people through the power of cash flow analytics. Now, we're going to talk about what this means and when this is possibly coming out, but just know that the goal of this Cash Atlas that Chase is implementing is to look at your bank transaction data to build a complete risk profile and to assess the consumer affordability and ability to pay. So what you need to know about this is what all this means, when is this going to be coming out and be implemented, and how it can potentially affect you when you're trying to get funding for your business in the future. If you're new here, I'm Will Frazier, and I'm a former business banker, and I've helped hundreds of clients obtain funding for their business on average about $108K per client. Okay, so let's kind of talk about why all of this is happening. First off, basically there have been a lot of people taking advantage of the no-doc opportunities that are out there in regards to, going to the banks and getting funding for your business in the form of business credit cards and, other no-doc lending products. The problem is there are some people that go and, just try to get as much money as they possibly can, but they don't actually have a plan for using the money for their business. And sometimes they have the wrong plans or bad plans, and they end up defaulting on the money that they get. And that causes trouble for banks. Why? Because banks are lending out money with the hopes that you're going to, of course, pay them back, and they can, collect interest eventually and the payments and, make money in that way. And they make these decisions based off of a person's personal credit score. The problem is with a personal credit score, there are things a person can do that can help to improve their credit score, which may not be a accurate assessment of what is going on currently at the time. For one, you could have, had some, bad things in your credit in the past. The credit repair got removed. And then all of a sudden you have a 750 plus score. Or maybe you're in a bad financial situation right now, but your credit just isn't affected by the financial situation you're in. So your credit score still stays intact. So because those personal credit scores don't always tell the banks what's going on with you right now, and because the banks have been lending out money and there's been a good bit of defaults on the credit side, they want to make sure that they are getting the most valuable information they can to make the best decisions on them giving out money so that they can ensure that they get it back. Now, that doesn't mean that the FICO score in your credit profile is completely done just yet, but I'm going to expound on that a little bit more later. But for right now, currently, Chase has decided that they are going to go with the cash flow underwriting system, which gives more valuable real-time information on what is your current financial status, the financial status of your business, that is, and if you have money coming in and out of your bank account, if you're overdrafting constantly, if you're constantly, not having enough money in the bank account and going into the negative, or if you just have any money coming in there at all. Now, I've said this before, that there are going to be a lot of changes that are going to come, and it's going to be, harder, whether it be something from the economy or it be from banks making changes like this, where they are trying to verify more information to make a more accurate assessment of if they should approve you and how much they should approve you for. And with them making an announcement like this, like just a few days ago, that's telling me that, once again, I give you the warning. If you haven't already gotten money for your business, you might want to go ahead and go get the money that you need for your business, because things are changing and we don't know the exact days or times, but it's getting really close. And with Chase being such a big bank, they're the biggest bank in the U.S., they made this move. So everybody else, the smaller banks, are going to be looking at what they're doing. And when they make a move, it's obviously a good decision for, other banks to do it, to make sure they are assessing their risk properly and they can not have defaults and stuff like that, so that they can grow, or try to grow to the size of Chase. So it would make sense that they're going to adopt this as well. And there are already other banks that have adopted this too. As a matter of fact, they just had a cash flow underwriting summit today, September 10th, So there's a lot of banks that are thinking about going this route. So, outside of the window of time that you have right now until it's finally fully rolled out, and I'm going to again talk about that in a second, just know that it may not fully be done as far as your credit profile being included, because we can see here on the Nova Credit Cash Atlas website, they're basically saying here that it does improve risk assessment, but they use cash flow data to supplement or stand in for traditional credit history. So that means that they can use this information from your cash flow in your bank account with your profile, with your credit score, so that it is not 100% of the decision maker on the decision that they come to. But it does say that it could stand in for traditional credit history too. So it's going to be a matter of how Chase chooses to implement this. With something like this, it's usually the bank, they'll tell the person that's providing this technology, hey, we care about this factor more than this factor, or this factor more than this factor. They plug that into the system, and then when somebody applies, then they'll get back the result that they want. And each bank can usually customize what's important to them, and then they can get the results that they want to see based off their risk appetite and what they're willing to deal with. So because they usually have that type of customization, this can go a bunch of different ways, and what's likely to happen is that this is going to be tested out. Something that Chase likes to do is around this time, September, October, like in the third quarter, beginning of fourth quarter, they do make announcements, and sometimes they'll start mini rollouts after announcement during this time frame. So it could be that they start pushing this to a few states, to a few cities, pushing it for this product like credit cards, or this product like loans. So they'll just test it out here and there, and it might randomly be tested out on different people and not everybody that comes to apply for the same thing in the same day. So while it is still not fully implemented and fully rolled out where they are 100% doing this every time, you could be one of those random people that when you go to apply, you could get hit with this. So that's something that's possible. But one thing is still for sure, it's better for you to try to do something now before it is fully implemented, because once it's fully implemented, that's going to be when pretty much everybody is going to have to deal with this, and you're going to have to be able to provide proof of revenue and cash flow, and the no doc thing is going to be totally out the window. And that's going to suck for you guys that are, starting new businesses and trying to get money for your business, because, maybe you do have the credit, but if this is more so less reliant on your personal credit and more so reliant on the cash flow, well, your business doesn't have any revenue coming in, and you got to get a bank account, and you have to get some money rolling in, and then you can start getting credit for your business. So if you plan on starting a new business during this time while no doc is still a thing, now is probably the time to go ahead and start that business so that you can get some funds for your business while this is still a viable thing. Because in addition to them usually doing like little rollouts over the, fall, winter months, usually sometime at the beginning of next year is when it's going to be like a full rollout of whatever it is, maybe in the first quarter somewhere. So you definitely want to hop on top of that before that time comes. And as I mentioned, I help business owners get funds for their business all the time. So you might want to book a funding strategy session with me so we can talk about getting money for your business before all of these big changes start happening. But also I have my high limit funding engine down below, which can show you how to build the credit profile that the banks are looking for currently to get you approved for those higher limits, and how to eliminate the mistakes that can hold you back. So check that out down below as well. Now, if you have a new business and you want some easy credit cards to get that you can get about 50K or more, go ahead and check out this next video, or you can check out this video, which YouTube thinks you might like, and I'll see you guys in the next video.